Hello again, everybody, and welcome back to another edition of the Forex Market Preview. My name is Jason, and if this is the first time you're joining me, thank you so very much for doing so. I hope to make it worth your while, and if you're one of the more than 50 or 60,000 people who continue to get this email every single week, again, thank you guys for showing up again and again. I really appreciate that. It's all of your comments, all of your emails, everything that you guys send me and talk to me about. I really appreciate it. It keeps the fire going and keeps me interested in what I'm doing. And this week I'm going to try and give you guys some stuff that'll help you make some money. So also go ahead and get started. The last thing is, before I kick over to the charts here, is that if you're a Syndicate member, you're going to want to hang out till the end, because I'm going to talk to you a little bit about something new that we're going to be doing for Syndicate members that you're probably going to want to know about. But we're going to start off today with the Aussie Dollar. Now, the Aussie Dollar has been in a downward move here recently. And as you can see here, looking left, we've broken this low level back in here. If I come back in here and kind of open this up and I draw in just a line right in here, this may be hard for you guys to see, but basically at 112, basically $1.12. And we run back to the far right edge of the chart, you'll see that we were hanging out above that, and then we just fell off a cliff, basically dropped right off the nose, broke structure to the downside, and now we've continued to press lower. Well, what we would expect to see, guys, is the exact same thing that has happened here recently. As you guys can see here, what we had was a little cipher pattern action that came in right here. This was a nice little cipher pattern. Boom. The 786 actually came in somewhere around here where the pattern completed. We pressed down a little bit lower, but structure held us up. If you look left here on this structure, market came back down into the previous structure support level here. As the market came down in there, that support level held, and then the market rallied out of that, and that actually hit both of the targets. It hit target 1 and target 2, and about, it ended up being about 50, 60 pips in there total once you calculate in the target 1 and the target 2. Since that time, what's basically happened is when you look at something like this, and we're managing structure, we're looking at structure, we know that the low point came in here. Okay, and then the market came back down in and retested that low point. So I can go ahead and draw a support line in here, somewhere in here, just denoting where that line actually comes into. Then what happens? Then the market breaks down. We actually had another little support level that came right in there. Market looked like it was going to rally off of that support level a third time, but instead this time came down, broke structure. Once we break that structure, we're going to be watching for, on the trend, under the trend continuation trade rules that we talk about, a rally back up into that previous structure. And again, as you can see here, the market rallied right back up into that. Boom, we retest the structure, it ends up holding, and the market rolls over once again. This time, the market violating that structure again, looking left on the support, and now we have a long-term support level looking left that we've identified here under our support level. We also have this other previous shelf that the market has run into. So for those of you who are looking to trade this, again, we don't know how long this trend is going to last. This thing could last days, weeks, months. We don't have any idea. But we do know the market's oversold right here. It's giving us a very nice doji candle here, if you guys can see that if I move my cursor. And what we can expect, what is reasonable to assume, is that at some point, perhaps right here, this market is going to rally back up. And somewhere between this level, between the level at around 1.012's, $1.12, and about $1.16, we're going to be looking at for a potential reversal. So right in here is a pretty good place where the market may decide to reverse. Now, if you're looking for where those stops should go, well, just look left. You've got this swing high right here. Your stops are going to need to go above that swing high. And again, if the market violates those swing highs, well, what has it done? Not only has it not chosen to go into trend continuation mode, but it's also violated that previous support level that we've been watching. And guys, if you do nothing else over the course of watching the Forex Market Preview, then learn to read the structure. The structure is the language of the market. It will tell you what the market is thinking and what it is potentially going to do. And so when we watch this stuff happen, being able to identify this structure, recognize what's happened in the past and what could potentially happen in the future, gives us a wealth of information and gives us a wealth of potential trading opportunities that otherwise you might not have honed in on. So anyway, we'll continue to watch this, but that's kind of the area that I'm going to be eyeballing there is right in that zone. So we'll come back next week and see if we can get a rally up in there, or maybe even a potential a roll out of there too. So we'll see what happens next week. Let's move on down to Canada. Canada's another great example of that structure. If I go ahead and I line this thing up, you guys are going to see that we had this nice little structure level here. It was something that we had been watching. We had a false breakout that occurred right here, and the market rallied right back up. So basically we tried to break down, couldn't quite get there. Market then turns around and rallies right back up again. That's the a classic false breakout. Then the market drives down again. We rally back up. Where do we find previous structure support becomes resistance? Then the market breaks down. We get a new structure low. In this case, market rallies back up. We would have been watching this level here, but the market never gave us any type of reversal signal. It just continued to rally, and what happened? Came right back up into that structure level, and then on Friday gave us a very nice reversal candle at in the last 4 hours of the trading day. Now, we actually identified this in the, I believe in the private client group we were talking about this move. It might have been this one. I can't remember. Probably this one. We were watching the market, came back up in there, and I told private client group members, hey, pretty good area to look at shorting right here. Market did, in fact, roll over. I think that would be right. It'd be I think the third. I'll have to look at the calendar and see. I hate to make wrong judgments. We look at so many of these that sometimes it's tough for me to remember exactly what trades I covered with you guys in the private client group. But now we've come right back up in there. Beautiful selling opportunity here. Look, you're looking at basically 196 here for potential shorts. Stops right above 101.52. And, potential move back down into, 121s. So you've got a pretty nice, about a 1-to-1 risk reward there. Market hasn't violated that structure. If we get above the spike highs here, highly likely that the market is going to reverse, and we're probably wrong on the trade. Remember, you're dealing with the probabilities here. You're dealing with the likelihood that you're going to be right versus being wrong. And then you're looking at the risk reward profile. Those are the only two things that you really have to concern yourself with when you're trying to analyze the market. So, moving right along, that was dollar Canada. Now we're going to look at euro dollar. Euro dollar has put in a Gartley pattern here. Now the buy was actually around here at 103.15, but the market continued lower, and just like we saw back on the cipher pattern trade on the Aussie dollar, we retested this structure level. So previous structure back here, the market didn't stop off at the 786. It actually came back down in and retested. Now I won't get into the stop placement on this. Basically, stops would not have been violated by about one tick. So you're in kind of that iffy zone. But if you're walking into this thing now and you're looking at it, you're saying, look, stops didn't get violated. I'm technically not out of this trade. Guys, look at this risk reward profile. You're looking at 129.33s basically for your stop, which would be right here. I'll just draw this stuff in for you, somewhere around there for your stop. I'll go ahead and change this to red to indicate the stop. And then you've got your potential initial target here. If I'm drawing this thing in, boom, you're going to enter the market somewhere around here. Let me grab my line tool again. You enter, assuming that we open right where we stopped, and then boom, right there. So you're looking at basically a 1-to-1 risk profile still to target 1, and then you've got potentially some follow-on targets up here to 130.96s. So, pretty decent trading opportunity here if, like I said, if you follow the rules and if you analyze the risk reward. Again, what's the likelihood that I'm right versus wrong? Well, markets come into structure, held structure at the end of the week. We're going into Monday. Now we're looking for a potential rally out of this with the advanced pattern formation. I take them all day. And, every time I can find something like that, it's a beautiful trading opportunity. So, there you go. Now, the pound dollar, this is something we've been watching for a long time. We've been watching this rally up into this zone on the daily chart. We're on a 4-hour chart now, but the pound dollar watching this rally, and we expected the market to really come down out of this hard, and what we got was kind of a stutter step out of this, and actually we ended up getting stopped out of this trade as the market continued lower. Now, here's the thing. If you were managing your trade well, here's what happened. A market came down in. We ended up shorting the market somewhere up in here. We came down, and then we just managed this trade. I'm going to move this line. We managed this trade as we went down, and if you're managing your trade via the structure, you're just watching this market move. And every time the market puts in a lower high, whoops, hang on. God, good grief. Every time the market puts in a lower high, you're just simply moving those stops. Stop moves, and then finally down here, what ends up happening is we actually get a very nice double bottom. Double bottom comes in, you got your structure stop up here, and then boom, the market rallies up, and you're probably taken out, somewhere in here on this candle or somewhere here on the white candle right next to it. So you didn't make hardly any money on this trade, which is always a bummer, but you should not have lost money on this trade because of if you've been managing your trade correctly. Now, again, I don't get into a lot of that trade management stuff, but we do talk about it briefly. Those of you who are, who've been through the Ratio Master Series, who've been through the 12-week transformation or the Pro Trader Bootcamp or something like that, you're a whole lot more familiar with this stuff than, say, your average watcher of the Forex market preview. But point being is that there are ways to manage these trades as the market starts to go in your favor so that you can, protect the open position profit and potentially protect some of the capital that you have. Now, the market has rallied out of this, and then we put in, the high water mark here. And the market tested that 3 times. 1, 2, 3 times, and then rolled over, and we've pressed right back down into, look left, previous structure resistance, now into support. So is there a potential trend continuation trade here? Yeah, I absolutely think so. Let's bring in a Fibonacci retracement here and take a look. We're sitting on the 618 retracement at structure. If you're going to buy this market up right here, your stops are going to have to go below 101, or basically below 152s. And for some of you guys, that's going to be a lot of risk because we're at 153.60s now. So, you got about 170, 180 pips of risk. Your accounts may not be able to suffer some of that. One of the things that you guys can do is just simply wait for the market to come back down in here deeper. So let's say that, hey, I can't afford 160 pips of risk no matter how I slice it up because of my account size, but I could afford 50 pips of risk. Well, then all you do is 152, so I can take 152.50s, or 152.45s, basically I can buy if the market will come back down into the previous support level. And you can just play it like that. Look, if the market comes down in here, back down into this support level, I'm going to look to buy it up on a retest of previous structure. Now, it's not a play off a traditional trend continuation trade like we talk about in the technical trader workshop, but it is a viable trade. It is something you're coming back down into structure. We're going to look to see if the market's oversold. We're going to run through our syntaxes as we move through the market. Now, let's move right along here. Euro yen, I don't really want to talk about because that's kind of breaking out here. Aussie yen, this is the Gartley pattern, and before you guys go, I want to walk you through this. Now, we just had a winning cipher pattern trade on Aussie yen. Market rolled over, hit target 1 and I believe target 2 as well, and now we've set up a very nice, again, a Gartley pattern we're looking for it to complete around 99.86s, 99.90s. We have the 100 even handle in here, so that may play an issue, although it hasn't here historically, it doesn't look like, although the market has kind of had some choppiness around the 100 even handle. So we'll have to wait and see. But let me walk you through this trade setup. So the initial thing that we have to look for when we're trading these advanced patterns is, and I'm just going to delete all this, is the anchor leg. The anchor leg is the leg that we're going to draw everything off of. And this is in, basically what we would call the X to A leg. And if you don't know what anchor legs are, real simple. Next time I hold a technical trader workshop, just make sure you're there, because I spend a lot of time teaching guys how to identify structure, how to identify technical breaks, and it's a free week-long seminar that I hold for you guys, and it's all online. So the next time I do that, just be watching your inbox and make sure you register, because I'll teach you all this stuff for free. But what we're looking for is this, essentially this impulse leg. It is the anchor leg that everything is going to be built off of. And then what we're going to do is we're going to take our Fibonacci retracement and we're going to go swing low to swing high. And we're going to look for, again, that 618 retracement. This is the first indication as this market moves down that we could be looking for a Gartley pattern, is this 618 retracement. The next thing that we look for, boom, is at least another 618 retracement, which we get right here. The market comes down in. Yeah, we violated that, but we came into this 618, and for the purposes of this training lesson, that's all we're looking for. We're just looking for that market to come up into that 618, and that gives us basically the B to C leg. So we're looking for the X leg here to A. This is the A to B leg down here, and then B to C up here. So the last leg of the move, if I bring in my Fibonacci extension, and I bring in swing high to swing low and back down in, is we're going to look for a termination of the C to D leg at a 127 extension with 786 ratio confluence. It's very, very simple. One of the simplest advanced patterns there is. Actually, they're all pretty simple once you understand the concept behind how they're created. But we're going to look for the market to come back down into this 127 at 99.80s, 99.90s, and we're going to look to buy them up when it gets down there. Our stops will be below X, and we're going to look for the market to rally up out of this area. So once the market hits this 127 extension, we would expect it to rally up. And that's what gives us, if I go ahead and just complete this little pattern formation here, you see I have a nice little Gartley pattern here. Boom, boom. And that's, I'm running a little long here, so I'm going to go ahead and shut it down here, but I wanted to make sure I showed you guys this Gartley pattern before we left, so you guys could kind of have an idea of what it is that I'm constantly looking for in the market. I look for structure, and I look for patterns, because these things are high probability trading opportunities. I know that, depending on the pattern and depending on, the time frame, I'm looking at 70-80% accuracy on some of these things in terms of when the pattern appears, trading it profitably. So it's just a very, very, very good method for analyzing the market, and it's something that doesn't require any special indicators, any special, any basic charting package today will have all the stuff that you need in order to trade this. So anyway, by the way, I get every single week I get questions about what charting package I use. Apparently some people have been using MetaTrader and that's been their whole world, and they have no idea that there's other stuff out there that's so much better than MetaTrader. But this is actually an e-signal platform. It's, in my opinion, the best technical analysis charting package on the planet. Another one that you will see us use regularly is NinjaTrader. NinjaTrader is free if you are demo trading. eSignal doesn't care if you're demo trading or not. They want your money. So they're going to require that you pay a subscription for this charting package regardless. But NinjaTrader does not, and they have a very, very nice charting package as well. But every week I'm on the eSignal charting package. So now, for all of you guys who are not Syndicate members, I'm just going to let you go now, because what we're going to talk about next has nothing to do with you, and you're not going to want to, you're not going to care to hear about it anyway. So, if you're not a Syndicate member, thank you so much. I really appreciate you being here. Give you a couple good trading opportunities, and we'll be back next week to give you guys more good stuff as it presents itself. For all of you Syndicate members, here's what's happening. We have been working behind the scenes to do something really radical with the Syndicate. As you guys know, as Syndicate members, you get not only the Forex Market Preview, but you also get several, some trainings and some explanation stuff. So just some additional trade ideas that come throughout the week. Typically 2 or 3, just depending on how busy Akil and I are. We put this stuff out just as it comes to us. Well, we want to radically change the way the Syndicate works to give you guys a ton more stuff. And basically what we are building right now is it's going to look a little bit like a Twitter feed at first. But what we're going to do is we are going to start sending you real-time pattern alerts throughout the trading day direct to your desktop. We're going to give you guys a little bit of software that's just going to sit on your desktop. You log in with your regular password from the website, and it's going to give you, we're going to send you signals throughout the day of, hey, here's a pattern that's setting up on the 5-minute chart. Hey, here's one on the 15-minute chart. Hey, here's an hourly cipher pattern that's setting up. And we're going to ship all those out to you with images of the charts so that you guys can see the patterns working. And then for some of you guys who have been members of the Syndicate, who have been through the Ratio Master Series, a Pro Trader course, you've been a pattern trader for a long time, and you've developed that skill, we're going to allow you guys to contribute to the feed. So you're going to have a chance to help some of these other traders who are newer, who are coming into the Syndicate from the Forex Market Preview, help send them those signals, show them those trade alerts, and really give you a chance to interact with other people and showcase your talent, and also provide content to the Syndicate feed. It's going to be really, really cool. And this is really, honestly, just the first stage of what we're planning for this piece of software that we're developing. But that should be ready to go. I'm cross my fingers here, so don't hold me to this. But I have been told by the software developers that we will have a beta testing model within the next 2 weeks. So if that's the case, you guys are all, it's going to be part of your subscription. It doesn't cost you a dime more to have the feed. We're going to be radically changing this. We're going to be giving you, Syndicate's $20 a month. We're going to be giving you, hundreds of dollars a month worth of content and signals in the Syndicate for the same price that you're paying right now. So I'm very excited about it, and it's going to be, it's going to take your guys' understanding and knowledge about pattern trading to an entirely new level. And you're going to get a level of support from us and from the crew here that you've never gotten to have before at a price that's just flat out ridiculous. So be on the lookout for that. I'll have more information out about it over the next couple of weeks, but I'm very excited about it because it is going to, it's going to be such a huge benefit to you guys who are really earnestly trying to learn this and learn the skill of trading. So until next time, guys, good luck and good trading. I will talk to you soon.